system is lacking. Um, if interest rates go higher, what that says is the marketplace is saying there's more and more risk of debasing the currency. And that's how they're going to pay the debt off, is by paying with monkey money, with money that's half or a quarter or 10% of today's current buying power.
Yeah, Bill, how do you quantify the dollar's remaining reserve status timeline? 6 months, 2 years, 3 years, before it loses majority global trade dominance?
Uh, that's a tough one because if there's some type of an event, you may see the BRICS. The BRICS may just stand up and say, "That's it, we're done. We're not using SWIFT anymore. We're not using the dollar anymore. We're going live with our payment, trade settlement system, etc." I think it depends largely uh, on the decisions made out of the BRICS.
Got it. Let's move to precious metals, gold and silver. Maybe we should start with silver. Silver tightness in London has worsened dramatically this year, with refineries like India's largest reporting stockouts for the first time ever amid festival demand. You've predicted a COMEX failure to deliver in silver before year end, as I remember correctly. So what
Yeah.
price levels would you signal this break, and why silver over gold? Why silver over gold at the first domino?
Well, that's the silver over gold. That's easy because silver is such a small market compared to gold. I mean, the same dollar has at least 10 times more power in the silver market than the gold market because gold is so much bigger. Um, as far as a failure to deliver goes, we're already seeing here in November, uh, the amount standing for delivery has already increased from first notice day. In past years, if you go back 3, 4, 5 years and earlier, the first notice day would have X amount of contracts, and by the time delivery was made, there might only be 10 or 20% of those contracts still standing that didn't walk away and take a fiat settlement. Over the last couple years, maybe a little more than 2 years now, what's happened is you have X amount of contracts standing for delivery, and by the time the delivery cycle is done and deliveries are being made, that number might be 1.5x or 2x. And it's already looking like November, which is traditionally an absolute non-delivery month. We may have 20, 30, 40 million ounces of silver standing for delivery. And then, of course, you've got December, which is a big delivery month. And then again, I believe February. So they're running a gauntlet right now trying to source metal to deliver to the contracts that are standing for delivery.
Yeah. So, Bill, how would you, on the scale from 9 to 10, how would you describe the disconnect between the paper market and the physical market?
Oh, it's 100%. I mean, the big drop on Monday that we saw in both gold and silver, that was done with paper. I think the number that I heard was 1.2 billion ounces of silver traded on Monday. The world only produces 850 million ounces collectively in a full year. That's global annual production. So you had almost 1.5 times the amount of silver that's produced in a year traded in one day. Uh, I mean, I don't have, I can't show you proof that no gold or silver, physical gold or silver were sold, but I can tell you from the standpoint of the mentality of the buyers have had a hard time picking up big pieces. When I say big pieces, 25, 50, 100 million plus. They've had a hard time procuring gold and silver in those numbers. Any buyer, any physical buyer that got nervous, they would have sold, they would have hedged with paper, is what they would have done. You didn't, on Monday, you did not see, in my opinion, you did not see any real physical gold or silver hitting the market. What you had was it was a paper slaughter. And that's, you could go back to Robert Rubin's strong dollar policy in 1996. And that's been the case on COMEX and LBMA ever since, is that every time we see a waterfall on a gold or silver chart, it was caused and done by paper sales, not physical sales.
Yeah. How do you see central banks buying in the next period? Will they go much more aggressive, or they will stay in let's say in the same levels like the recent 12 months or something like that?
Yeah, no, but central banks have their purchases have been continually expanding. They've gotten bigger and bigger and bigger. They know, I mean, Lucian, if you and I understand this, and a lot of people understand that the dollar's a problem, you better believe that central banks all over the world know that the dollar is a problem, and they better hedge that position or put something in there or on their balance sheet that's going to expand when the dollar collapses. They're going to have to, they understand that gold is the answer to a collapsing dollar. So that's why these central banks are unloading gold. And I believe, the official statistics show that yes, they're buying hand over fist. But I think there's a lot of unofficial buying by central banks that's not being reported.
Yeah. Bill, you've predicted inflation will decimate living standards, with basics like food and fuel becoming
Right.
luxuries like in Mad Max style chaos. Do you really believe that? And how do you see that scenario evolving?
Well, I've said this for 10 or 15 years, that when all was the end game would be inflation and deflation at the same time. Inflation of the things you need to live and survive on, and deflation of the assets you already own. And I mean, you can see the beginnings of that. Uh, just look at the commercial real estate. That's collapsed 50% or more. And here we are looking at credit. Look at the auto loans. I mean, auto loans are cratering. Look at home loans. Home loans, uh, late payers. I mean, those are expanding. All the classic signs of a credit problem, they're right in front of your face. Um, and a credit problem means forced liquidations. In other words, it means owners of assets are being forced to liquidate them. That causes a deflating price, while at the same time your eggs, your gasoline, etc., are going up they cost more. So it's taking more dollars to sustain your lifestyle or living.
Yeah, yeah. Bill, you have emphasized getting capital out of the system, but how could we explain to an average person on the street, in the real terms, how to do that?
Well, the way to do that is simple. If you have stocks that are core positions that you never intend to sell, then tell your broker that you want to get a certificate. And the best way to do that, the cheapest way to do that, is to tell your broker to send the shares electronically to the transfer agent. It's called DRS, direct registered the securities. Once the transfer agent holds the shares, then you tell your transfer agent, I want my certificates, and they'll send you the certificate directly. That's like having a car title or a deed to a home. It's proof positive that you own those shares, because with the great taking, and the great taking is no joke, all of those laws are on the books. The ink is dry. They've been doing this since 2014, getting ready basically to bail in the public. When you deposit money at a bank, you're no longer considered a depositor. You're a lender. When you deposit shares at a broker, those are no longer your shares legally. They're the broker's shares legally for your benefit. So if your bank or your broker goes under, they're going to take your assets to try to fix their problem. So that's
That's a
getting
good
out of the
point.
system. If you have bank balances, or when people ask me how much gold or how much silver should I own, my simple answer for the last probably 4 or 5 years now is you put into gold or you put into silver whatever amount you don't want to lose. Because gold and silver cannot bankrupt in a world that is going to be, uh, everything is going to bankrupt. The whole debt facade is going to come down.
Yes, I have a good question from one of my followers, and he asked me to ask you what bubble will burst first, in your opinion.
Well, when one bursts, they're all going to burst pretty quickly. But, I'm on the record saying that I think the derivatives complex is going to be taken down by silver. I think silver goes and gold will go immediately. And that's going to put a very bleak picture on the other contracts that COMEX has, whether it be, oil or pork bellies or interest rates or whatever. The value of a contract that cannot perform is zero. And if you've zeroed out, uh, and I'm using silver because that is the market that I believe is going to detonate the entire system.
Okay, okay. There is a lot of fuss about tokenized gold, the gold being digitalized. What's your take on that process, and do you believe it will be much bigger in the years to come?
Yes, it will be much bigger. And I would just say that if you're involved in a tokenized gold uh, deal, you have to have trust. You have to trust that that gold actually does exist and it actually is in the vault. Having gold in your hand or silver in your hand, you have it. Having gold in a private non-bank vault, as long as you've bought it from one company, moved it to the private non-bank vault, then you've got two separate entities. You don't really ever want to buy from a dealer that stores the gold themselves because who's there to watch them? There's no way to know whether the gold actually got there. But if you've got two separate entities, or in a retirement account you get three separate entities, then you've got each one watching the other to make sure that they're honest. So my comment on that basically is, with tokenized gold, there's still trust involved. There has to be trust
Yeah.
involved, otherwise you won't.
Yeah, as the price of gold goes higher, there is a talk that the governments will try to take a piece of that cake. Do you believe they will impose new taxes on gold, or some new form of, I don't know, in any way to take, not to take the gold, however, to make more money off the gold that people hold?
Yeah, that's basically a confiscation question, and I think it's more likely that they will raise and make special taxes on gold and silver. But then again, that's not going to affect barter, or you pay for a car with an ounce of gold or whatever. Um, I think that taxation is much more likely than confiscation.
Yes, that's why I asked about the possible new taxes first. Yes, because I
Right.
agree on this. They will not take the gold probably. However, they will tax it. Bill, we didn't touch on geopolitical landscape globally. How do you see? How do you see it? How do you see a global geopolitical landscape, let's say in 2026, in the year that is coming?
Well, I mean, obviously there's hot spots all over the world. Uh, I think the next big one is going to be Venezuela. I mean, we're amassing troops and ships off their coast, and just this morning, Putin announced that he's going to be sending hypersonic missiles to be based in Venezuela. Well, first off, we don't have anything that can catch a hypersonic missile. I think we've had two or three successful tests, but we don't have any actual missiles, working missiles yet. So uh, the bottom line is, if you can't catch it, you can't kill it. So if you got a missile inbound that you can't catch, it's going to land, and it's going to strike, either at the target that they've programmed, or miss, but it's still going to strike. The problem with the problem with having hypersonic missiles pointed at the U.S. is we can't defend it, and I think that's probably going to be the big news next year.
Yeah, do you believe that this is similar to Cuban crisis and diplomacy could win a war here? To put it out this
I
way.
think it's worse than that. I think it's worse than the Cuban Missile Crisis because you had statesmen running the world back then. Uh, you had serious people running the world. The world is so fragmented today. Uh, and I mean, if you look at what just look at the things that come out of Trump's mouth. I mean, I think he's done some good things. I think he's done some really bad things. Uh, but he needs to keep his mouth shut when it comes to things like this. You know, foreign, trying to bully other leaders verbally. I don't see the benefit in that, and I don't think that that's a serious way to uh, to handle foreign affairs. I mean, just think about some of the
Yeah.
things that have been said. 6 months ago they were talking about turning Gaza into a waterfront resort. I mean, that's not even serious. I mean, maybe they are serious about it, but that's not serious policy.
Yeah. Maybe final question. You mentioned Trump, so I want to conclude with this. How do you see the tariffs, the tariff war on global scale evolving over the next period?
Well, I have to admit, I originally thought that we would see price spikes in various industries, and so far we've not really seen that. I thought that it would be more inflationary than what we've seen, but to this point, we're not seeing the inflation that I thought we'd see immediately, coming right out of the box.
Why do you think that is the case?
Um, I think suppliers are eating some of it. I think firms that are importing and the cost is higher. I think they're eating some of it. And yes, we've seen some inflation, but nowhere's near what the tariffs are. I think give it another 3 months or 6 months, and we'll get a better picture as to who won and who lost, or who is winning and who's losing.
Yeah, yeah. Bill, how can people reach out to you?
You can go to my website. It's just billholter.com. There is a contact button on there. Oh, there is an icon up top. It's called Grizzly's Corner. It's a great resource if you're wanting to prepare. So definitely check out Grizzly's Corner. That's got some really good stuff in it. And if you want to contact me directly for precious metals business, my business email is bholter@proton.me.
Excellent. Bill, this was an excellent conversation. Thank you very much for joining me today, and I look forward to host you again sometime soon.
Thank you, Lucian.